do believe we should be getting a bounce upwards somewhere to 588 to 589 tomorrow. What's up, guys? This video should be nice and simple. In today's video, we're going to take a look at what the next steps are for the market. Obviously, the market collapsed today. We gapped up in the morning as I expected we would. We did very, very well in the morning, and then after that, it was a complete onslaught. And we're going to see when the next time there is to essentially buy the dips and play long. And I'm going to explain why I think the market is going to get a bit of a gap upwards overnight. We aren't playing that gap, but I'm going to explain my thought process moving forward for what I think is going to happen in the market. We're going to take a look at the tech stocks, the SP500, the NASDAQ, the VIX, as well as the crypto market. All right, so without further ado, let's get started with the video. All right, guys, first and foremost, one of the main reasons why I think the market ended up getting a pullback to begin with is the 30-year. This is a chart of the 30-year Japanese bond yield. All right. So what's currently going on in Japan is very, very interesting and is a big precursor of what is going on with U.S. securities. Okay, so basically people in Japan, to make this very, very simple, people in Japan expect inflation to rise. Okay, so when they think that inflation is going to rise, the interest rate goes up. Okay, so as we can see, the interest rate is at an all-time high. So because of inflation rising, right? So because of that, investors sell the Japanese bonds. And when the bonds are sold off, the price of the bonds go down. Okay? So when the price of the bond goes down, the yield goes up. That's basically how bonds work. All right? So now, Japanese banks set loan rates. So they use the rates depending on the yield, which is basically the bond yield, as well as the risk premium. So when the yields rise, okay, very simply, when the yields rise like this, the bank loan rates also rise, because that's how a loan rate is calculated. It's based on the yield as well as the risk premium. Okay, so now internationally, globally, people borrow the Japanese yen at low interest rates. Okay, so think about the yen carry trade. So people borrow the Japanese yen at low rates. But then if the Japanese interest rates suddenly go higher like they are right now, that makes it very, very backwards. People are not going to try to borrow the Japanese yen, right? So they wouldn't try to borrow something that's more expensive. So then investors, because they are getting loans at a much higher rate, now that the yen is becoming like the situation with the banks and loans are increasing like this, borrowing the yen becomes more expensive and repaying the loans becomes very, very difficult. So currently what's going on, to wrap it all up, to repay the loans, okay, so number one, the yields are increasing. When the yields increase, the banks give out loans at a higher price. That is impossible to do for the average person in Japan, because the price of goods are also increasing. So there's not enough money to pay back the loan. The only way that they have to pay back the loan now is to sell their American assets, to sell their American stocks. So that is why currently the U.S. stock market, in my opinion, is getting a big hit, because a lot of Japanese money is exiting the market to pay back their interest on these loans. So essentially, if this is essentially a way for the Japanese market to stabilize itself, and unfortunately it's at the expense of the US stock market. So that's basically the first thing that I want to go over. Number two, this is a chart of NVIDIA. All right, NVIDIA reported decent earnings. We gapped up. Spectacular. What essentially caused this is the second thing that I think caused a big pullback in NVIDIA and the tech stocks in general, was that NVIDIA had a lot of forward-looking sales that were potentially on the market for themselves. All right. I don't have infographic to show you guys, but NVIDIA basically said that they were going to, they had like $500 billion worth of contracts in the pipeline, but they just don't have they just don't have the manpower. I believe they said something like that to fulfill the orders, but they basically have a backlog of a lot of orders. All right. This was similar to what Cisco did in 2000 prior to the dot-com bubble. So what NVIDIA just did was straight out of Cisco's playbook in 2000. So that is obviously not a great look for NVIDIA. In the short term, it looked spectacular. Wow, there's a lot of backlog of potential sales. It's awesome. But that doesn't translate into anything. That doesn't guarantee that these sales are actually going to do anything, right? And it's a bad look that's exactly what Cisco was a top stock back in 2000. And we know what ended up happening right afterward due to the dot-com bubble. So that is another very important major thing to look at. So with those two things, in my opinion, that was a big reason why the market also got a big collapse. All right, so now let's go ahead and take a look at the VIX. All right, the VIX, it's not overextended the way that it was the past 2 days. We opened within the Bollinger Bands, and now we're simply just closing outside of it. The VIX is above $25. That is very, very weak for the overall market. And it's also very weak that the upper level of the Bollinger Band is pointed upwards like this. I do believe that the VIX is going to get a pullback, and I do believe tomorrow morning the market is going to end up being green. But what happens afterward is very, very dependent on how far the VIX can drop. In general, when the VIX is like this, and when we are very, very strong like this outside of the upper level of the Bollinger Band, the VIX is going to drop. If the VIX ends up dropping, then the market ends up bouncing. All right, because it has an inverse relationship to the market. So that's simply my thought process currently on the VIX. If the VIX drops down below 23, then it becomes a lot more bullish for the overall market as a whole. All right, next what we're going to do is we're going to take a look at all of the large tech stocks. So we're going to first start off by looking at Apple. Very simply, obviously we saw the entire market get a pullback, right? What I want to do is I want to look at where everything currently is sitting, all right? Apple is still holding above 265. It's still above all of these prior levels of support from the past few days. We need to take that into consideration, because if Apple was starting to really, really break down lower, that wouldn't be great. But currently, it does not look that bullish. This is clearly looking like we should be getting a bit of a pullback. I would not want to aggressively lean long here. All right. When we look at Amazon, Amazon also painted a very big red candle, dropped completely below 220 level of support. We're holding above 215. But again, Amazon as well as Microsoft. This is the daily time frame of Microsoft. Both of these are showing more potential room to the downside. Both of these stocks had important buyout news, or they were both investing large sums of money into a new company. When that generally occurs, there's a pullback in the parent company. Okay, so that's, in my opinion, another reason why Microsoft and Amazon are getting pullbacks. So Microsoft is, it's in free fall. So we have support at 470. We need to see essentially how 470 holds on Microsoft. And we already looked at how Amazon is holding 215. So this is a daily time frame of Netflix. Netflix is also below very major levels of support. It broke below 107 and it closed below 107. We're currently at 105.50. So it needs to reclaim back above 107. The other really bearish thing on Netflix is that the lower level of the Bollinger Band is pointed straight down. When it is pointed straight down like this, it shows that there is more potential room to the downside. Okay, so if there's more potential room to the downside without getting extremely overextended, it means that the stock can also continue to drop. When you look at Apple, right? Apple's lower level of the Bollinger Band is pointed upwards. It's in a vertical line upwards. So it means that there isn't that much more room to fall lower. Netflix's Bollinger Band is pointed down, which is way worse. It's the complete opposite. And of course, this is a chart of Google. We had a big gap up, right? We gapped up above 300, and then obviously we closed red for the day as well. Lower level is trying to catch up. The lower level of the Bollinger Band is trying to catch up. We are also trying to tighten up on the Bollinger Bands. We're holding above 288. We're holding above 286, 284. We're still above levels of support on Google, which is still important. And then this is a daily time frame of Meta. So Meta is still also holding above 580 level of support. This is still very, very good, in my opinion, for the support levels of these stocks. But you would have to be very, very naive to think that the market can't continue to drop. Based off of this move, once again, I do believe the market should be getting a bounce tomorrow. Once again, we made money overnight. We were long overnight into this big pop. Now that that has gone, all right, we have to basically take it a little bit one step at a time, sort of. These past few days, I was way more bullish. The bullish move has already occurred, and now we need to see things zoomed out a bit. The market, in my opinion, should be getting a bit of a bounce tomorrow, but what's currently going on in the underlying dynamics of the Japanese yen, the NVDA earnings, a lot of these things need to be taken into consideration. So that is currently what's going on, man, for Meta. And then last but not least, we could go ahead and take a look at Tesla. Tesla is also still, so this is daily time frame of Tesla. Tesla is still holding above 380. There's still room. It's still, still there, holding above support. It's still relatively stronger. Once again, there is more room to drop overall on the entire market. But Tesla, right? We're holding above 380, right? Spectacular. It has not dropped down into these levels of support the same way that Apple or these other stocks have done. It's still trying to hold these lows, all right? So we have to also realize that. All right, and now this is a daily time frame of the NASDAQ. So the NASDAQ is now at a level that I drew out in yesterday's video of where would be a really, really good long opportunity. 585 is a really, really good long opportunity. 583 to 585 area on the NASDAQ, good spot to go long. I do believe we should be getting a bounce upwards somewhere to 588 to 589 tomorrow on the NASDAQ here. We are also, this is a very big red candle. We painted a very bearish close. We basically closed at the lows. Really good spot to have bought some calls, in my opinion, for overnight, like a light position. You can see that the lower level of the Bollinger Band is pointed straight lower. Regardless, after a big weak day like this, it is not the time to pile into shorts. You don't just pile into shorts after a big red day like this. We were long over here. We gapped up. Down here, after making new lows, this is not where you pile into shorts, all right? This is a chart of the SP 500, same concept. It's basically right at the prior lows here at 653, right? We closed right below that level. So it's not an automatic clear-cut break below. The SPY is still trading above 650, which is decent. It's still good, right? But once again, there is more room to go. And at these lower levels, if we do really capitulate, and the capitulation would be the equivalent of what, another 3 to 4% to the downside, these are the levels where it would be much better to go long. not over here. We are in no man's land, essentially, right now. What we need to see is these tech stocks start to curl back upwards, and we need to see the VIX drop down below major support. If those two things do not occur, then trying to go long prematurely with like a hefty position, yes, we could go long overnight with a light position, but trying to go long with a hefty position is not the way to go, in my opinion. With all of that being said, and then last but not least, we can take a look at the daily time frame of the IWM. The IWM looks very, very weak compared to where the Bollinger Band is. There's a lot of room to the downside. According to the Bollinger Band as well, this is still showing a big move to the downside potentially. And you just have to be very, very cognizant, be very, very careful of trying to catch this weakness. There are levels that we are going to go long at. The easiest long opportunity is done. Overnight, it's a pretty good long opportunity. If we end up closing red tomorrow, or if we gap down tomorrow, I am going to lean long in the morning. All right, so that's the one thing. I just want you guys to understand that. But the IWM is not looking too good right now. All right, and now let's go ahead and take a look at the crypto markets. So Bitcoin is coming back down to very, very important historical levels. Bitcoin is right at 85,000. It's holding above 85,000. All right, very, very important level of support. Solana is still holding above 130, which is decent, right? It's holding above 130 and 128, decent. And Ethereum is also holding above 2,800, decent. A big chunk of this move in Bitcoin to the downside was due to Grayscale, which is the largest ETF holder of Bitcoin that brought Bitcoin to the securities market. They sold out a lot of Bitcoin. Once again, I think it might have to do with the files that were released, in that he was involved in the early development of Bitcoin and he helped fund the early development, which is not good. And that's also coupled with Bezos being involved with him as well, which could be another reason why Amazon's not doing too hot either. So that's another thing to really take into consideration in the market at the moment. There's the files that are released. There's the Japanese market basically imploding, which is causing the stocks to sell off, and Japanese investors need to sell U.S. securities to pay off their loans. And NVDA basically tried to pump up their earnings a bit using Cisco's playbook back in 2000, before the dot-com bubble. So there's just a bunch of stuff that was going on today in the market. And yeah, we didn't really do too much. We traded long a bit. We, played pretty nicely in general, right? But yeah, nothing too crazy to do. I wanted to be very lax and just watch the market just die. So that was pretty fun. But I hope you guys enjoyed the video. Once again, be very, very careful. Be very, very cognizant of trying to over allocate yourself to the long side, unless you are trying to get something out months out. Okay, aside from that, please be very careful with your portfolios. I will be here bright and early tomorrow morning in the Discord server, and I'll see you guys over the weekend when I post the next video. All right, love you guys. Have an amazing day.